Hey, good morning, good evening, good afternoon, wherever you are in the world. This is Jake Claver with the Future of Fortunes podcast with my partner in crime, Byron Wolf. How are you, Byron?
Good, brother. Doing real good, man. Enjoying this beautiful day in Phoenix, Arizona. Looking forward to Nashville next week, Dallas right after that. So definitely doing some traveling lately, but it is what it is. But it's a beautiful day. Trying to get into some crypto for our listeners. Today we're going to talk about insurance, how to protect your crypto holdings with insurance. We're going to talk a little bit about that cold wallet versus the hot wallet, the insurance that can be around that, the transactions, the safety of some of those transactions. But we're gonna really get into the insurance and how that protects you. So yeah, looking forward to this, man. This is gonna be good information for our listeners.
I think this is really relevant with what's gone on in the last couple of weeks here with the acquisition of Medico by Ripple. And then you've also got Ledger coming out with the new firmware update that allows them to basically get your keys. And they were even questioned by an individual about, what does that look like for the U.S. government? And they said, well, if we're subpoenaed, then we'll turn over your keys, right? So that's got a lot of concern for people. And I don't think they ever were going to allow people to operate outside of the system. I think they wanted to let people believe that they could. But now that these traditional custodians are moving in and crypto is starting to become more mainstream, I think it's perfect timing uh, that they, are bringing this side of custody in and lopping off the head of Ledger as they have, and everybody's running. They're trying to get an air gapped wallet, either Engrave or some of the other ones I've seen that were mentioned, which I think are good solutions. And I don't. Just to be clear, I don't think that there's any problems in the short term with keeping your stuff on Ledger. If you don't update the firmware, let it sit there. It's in the safety deposit box, or it's in your safe, or it's wherever it is, right? Um, but yeah, I think the narrative is set, and we should see mass adoption of crypto in the short term. Maybe within the next 6 months, and then we'll also have the custodianship of banks and traditional fiduciaries come along with that.
Yeah, so let me clarify something real fast for our listeners, and a lot of them are probably aware of this, but if you're not, we need to make sure you guys understand the big thing here. So cryptocurrency by law is not legal tender, guys. So if you think like, hell, well, it's covered FDIC or whatever, like, oh, well, I've got it at Coinbase, so it's protected. Coinbase is so Coinbase has some insurance, right? But this does not lean out to you guys. It's not legal tender. So FDIC is not insured. Your holdings are not insured. So if you have not done something to protect your assets, your crypto assets, you cannot depend on somebody else to do that for you. So when Jake's talking about having that, like, in Ledger or any other like cold storage or offsite storage or whatever, like that is a protective measure, right? It's kind of like, if you've got a secret pocket of your pants that you keep your wallet in, less likely to get jacked for your money. Right? You're probably not going to get pickpocketed. I mean, unless it's just a real big baller. But somebody holds you up and they ask for your cash and you give it up, like it's gone. So keep in mind there's different levels of protection. We're talking when Jake's talking, he's talking about like physically protected, like it's hard to get to, whatever. But if Ledger gives up that, your code, your key, right? I mean, if the government has it, yes, probably more secure that the government has it than just some rando on the internet or on the dark web. But I mean, guys, like big fan of some of the government, but man, they ain't supremely secure. So if they get it, there is the possibility that leaks out, goes somewhere else. I mean, we've seen it that I won't talk about the kid or the being behind it, but we all know that one kid, he leaked all the secrets recently. He's going to be doing much time. I truly think he was just trying to like, hey, look what I can do type situation, but is what it is. But these things get leaked, so it's out there. So what we're talking about is two different sides, right? So like, the whole two is one, one is none, protect your stuff, but we also think that like having the insurance against it would be smart as well, right? And so one of the big myths that I hear a lot when I deal with people that are in the crypto space is that their homeowners insurance. I don't know where this started. well, the homeowner's insurance is to protect me because I keep my wallet in my safe. Not true, guys. Like, absolutely not true. You know,
Even if
so,
you could try to add a rider on your home insurance policy for that, but I guarantee that Progressive or any other mainstream insurance is going to knock that back, especially if they'll insure the device that it's held on. So the $50 to $100 that it costs you for the device, they might cover that, but they're not insuring the cryptocurrency that's on that wallet. And I want to talk about, you mentioned the insurance that Coinbase and these other exchanges have. Okay, that's for them. It's not for you. And it's not crime insurance. Okay, so if your wallet gets hacked on their platform, too bad, so sad.
yeah,
You're not covered. It's gone. Yeah, so that's why people encourage everybody, and we have multiple times encourage people to get their crypto off of exchanges if they're not trading it and hold it in their own self custody. And that could be done through a decent wallet. It could be Ledger. It could be the Engrave. It could be a bunch of different other means. Hell, even a paper wallet. Okay, that's old school. It was one of the original ways to do it, but that's probably the most secure that anybody has right now with what's going on. And I've mentioned that, and a couple of people have reached out to ask how to do it. You can just Google it and figure it out for whatever cryptocurrency you need. But yeah, just well, so in Medico, and I deal directly with PolySign through the family office, and they have $50 million per vault of crime insurance on their vaults. Okay, so and there's go ahead.
You're talking about CCIC, which is commercial crime insurance coverage. So when we're talking about that, like if you guys want to Google it, that's the full name. CCIC, if you hear us say that, or we talk about crime insurance, we're talking about commercial. Now, granted, commercial kind of a misnomer, but commercial crime insurance coverage. So I just want to make sure everybody knows what he's talking about.
Yeah, no, that's great. I learn something every time I talk to you, Byron. So they just explained it was crime insurance to me. They didn't give me the full meaning behind it. But yeah, these other platforms don't have that. So these institutional custodians that are about to step into this space, they're going to bring that with them. People hold their money in the bank because they feel good that it's FDIC insured. We know that if everybody defaulted, that they can't cover. They've already spent 3/4 of that just on SVB and the other defaults that we've had here in the recent months. So they don't have it. If you even the $250 you got in the bank really isn't covered. So not trying to incite bank runs, just be smart with what you're doing. Yeah. So, but yeah, we're going to have a world where these institutional custodians have insurance that covers your accounts, just like people feel comfortable with at the bank. And that's where people are going to move their crypto, right? The downside to that is a lot of the upside when that happens will be gone. If grandma can do it, probably not a whole lot of money to be made left in the space, right? So, and then once institutions get a hold of it and they make fees off of it, you're going to have financial advisors and wealth managers step in and start selling these products. It'll be a big change to the way that this is operated for the last decade. But I'm excited for it because I would love to hand the liability of holding my assets off to a traditional custodian and have insurance on that, right? And then I know that I'm protected and I'm good on the back end if something were to happen. So you want to get into good?
Yeah, it's a timing thing, guys. Like, when we talk about putting that like in your cold storage, taking it offline, moving it out of that hot wallet or like leaving it on the exchange. Yes, it's significantly faster if you have your money on Coinbase or any of these other transactional sites. Yes, you can transact that super fast. Like XRP, literally within less than a second. But if you move it to the cold storage, or you move it, at least into like a warm wallet, the timing takes a little bit longer, right? If you've got it in cold, you're gonna have to plug it in, you got to transfer it over, then you got to transact. But like, think about this, and you made a great point earlier. We were talking off camera. The time, yes, it does take a little bit longer. We're talking about PolySign, takes a little bit longer. But I want you guys to, not necessarily in every single case, but like the longer it takes to transact the business, probably not every time, like if this isn't a rule, but probably the longer it takes to transact, honestly, the safer you probably are, right? Because they're looking for those fast get in, get out type scenarios. And that's why we say don't leave it on an exchange, because that's exactly what happens. They get in, however, like even if you're using two-factor authorization, guys, like they get your phone and it's probably on there, right? And so they can get your 2FA, in a heartbeat. So having that accessibility is going to be infinitely higher chance of having your stuff stolen. So I get it. It's frustrating. Well, I got this thing. It's my safe. I gotta get out the safe. I gotta plug it in. I gotta do my password. I gotta transfer. But like, think about like that's infinitely safer because if it takes you a while, it's not easy. And criminals are looking for easy. They want to get in. They want to get out. So when you make it tougher on them to get your crypto, they're probably going to go after the easier target. If you're walking down the street and you've got a wad of cash in your hand and you're half drunk, like you're probably going to get that stolen. But the guy that's 6'5", 300 something pounds, that's got two guns on his hips, and not showing off his cash and is completely sober and looks like an operator, he's probably not going to get jacked, right? So like, don't make it so obvious. Don't leave your stuff where everybody can see it. Don't brag about it. I see guys all the time, Discord, Twitter, all this stuff, man. Oh man, just crushed it, got blah blah blah. Here's my wallet. Check out what I've got. Like, don't do that. Like, don't do that. You're making yourself a target. So be smart, be safe. If you're not interested in having the insurance, like maybe you just don't feel like that's important. I get it. Just make it tougher for people to get to it. If you're a significant holder, like I would highly suggest you get the CCIC, protect yourself, but in line, don't like just depend on that either, right? Like just because you have homeowners insurance or renters insurance, doesn't mean that like you're smoking in the house and like putting out your cigarettes, in a trash can full of paper. Like you're not going to, set your house on fire. I don't got insurance. I'm not worried about it. Let's go. Drinking bourbon and smoking. Be smart, be safe, guys. Like we're not telling you, that you can just do whatever you want, get the insurance. Like if you're at fault for getting lost, like that insurance is probably gonna have a hard time paying. So like, it's multiple layers of protection. That's what we're talking about here. We're not saying, hey, do this, and then you don't have to worry about it, or do this other thing, and you don't have to be smart with your, with your crypto. We're saying, hey, do multiple things, multiple layers of security. Whole point between 2FA, two-factor, other, it's another level of security. So build in that security is all we're saying.
Yeah, and you might have multiple wallets, right? So that's something that I use. I've got, some people disperse their holdings across 5, 6, 10 wallets, depending on how much you have. That way, if just one of them were to get hacked, you don't lose everything. So just de-risk any way you can until these can be held by institutions and are fully backed with insurance. If you're interested in PolySign, they are $5,500 a year for their custodian service at a minimum. If it's over 2.5 million that you're keeping on their platform, they will charge you 22 bips or basis points. 100 basis points would be 1%, so it's a little less than 0.25% for people that don't know that terminology. So that's kind of how you can calculate it. And they'll allow you to pay that monthly too. So it's $500 a month, which is a little steep, right? If you've got $50,000 in crypto, $500 a month is probably not going to be what you want to do. But if you got a couple $1 million in crypto, $500 a month is well spent over there for what they're able to provide. And they've set that up specifically to be able to interact with the trustee if it's held inside of a trust. It involves 2 people to authenticate a transaction with multi-factor authentication for each one of them. So great solution that they've provided over there. And I expect that they'll license the cold wallet fractionalization of the keys software that they have to other fiduciaries, and there'll be a different front end on it to initialize the transaction that may just require one individual's input, right? So banks should adopt this. It should move to scale within the next, I would say, 12 to 24 months. I'd expect that the majority of fiduciaries hold crypto. And if we got enough time, do you want to get into some of the insurance products that can be used with crypto?
Yeah, I'd say let's wrap this one up, and then we'll move into the next podcast. So we'll wrap this one a part 2. Cool. So like real fast, just to kind of wrap this stuff up, guys. Yes, if that kind of level of investment in your crypto doesn't make sense, like Jake was saying, if you got 50K, it's not going to make a lot of sense to spend 500. But keep in mind, like as you advance up, what got you to where you're at today isn't going to get you to where you're going to be in a year, right? And so, like, don't think like I won't have as much. That's not for me. Well, if you continue to invest wisely, you protect your stuff and you continue to be involved in this, you will eventually get there. So, like, don't sleep on the next level because that this is a build thing. So, like, as you get more and more crypto, you may come to a point where you're like, hey, I need the next level of security. And that's really what we're talking about. I mean, if you're already a 2 million plus holder, then like you probably are hopefully, I don't want to say probably, hopefully you have something in place already. If you don't, that's a great solution. Again, we don't get paid by them, that's just we're just talking about these things. But if you're not there yet, like keep this in mind because eventually you will get there, right? And what got you to where you're at today is going to get you to the next level, right? So different levels. But you'll get there. Just keep paying attention, keep plugging out. Don't invest in things you don't understand. Don't buy things you don't understand. Be smart with your money, guys. 100%. But yeah, we're gonna wrap up. Then we'll get into that on the next podcast. We'll go into the different insurance levels. Jake, I'm gonna let you close us out, and yeah, then we'll move on.
Yeah, appreciate you guys for joining us on another episode of Future of Fortunes podcast. If you have not subscribed, I would encourage you to do so. If you're on YouTube, we're on Spotify, we're on Google, all those other places. Hopefully you're following us there, and we'll see you guys on the next one.